What is up, everybody? It is Friday, October 25th. I took one trade. In that trade, I cut it very fast just because of the action this morning. I mean, we opened up and we had a straight shot on up. So let's take a look at the chart. Starting out on the 4-hour time frame like we always do. We see here that, if I can get over to that side, overnight, we were moving on up here. Right, this was the open candle for overnight. We kind of had this indecision, and then the next candle for London session moved us up over this 4-hour fair value gap that I had mentioned yesterday in my previous video, that I wanted to see price close above that to then target this buy side level of liquidity, even this one right here, and potentially that 15-minute buy side that I had marked out on my chart. And as you can see, obviously we got that candle and then a big push on up. Now, this was not expected on my end to have such a big push on up, but we play it anyway. And I said that if we do get that close above, we have little to no resistance to this bullish draw on liquidity. So coming into the market, my ideal scenario was that we get a little bit of a push up at the open and then get some kind of retracement back down once we hit that bullish draw on liquidity that I had, and then be able to tap into a 15-minute fair value gap to then target the other two levels of liquidity that I had. Now, as you can see, price just kept going up and up and up and up and up. So that was unfortunate. I didn't catch that move, so I held on, just waiting and waiting and waiting. So I ideally wanted to wait until after 10:30, right? I did mark out a couple of areas here where, yeah, we did tap into this area of liquidity. And just from my experience, I've noticed how it's better to wait for either another secondary sweep of that level, or just to have like really solid confirmation that we were going to end up dropping. So if we end up moving down here, to then maybe get some kind of retracement and then find a bearish fair value gap getting validated to then go target lower, or see if price drastically drops down into this and then bounces to then go higher once again and hit a new high of the day. So that was my plan. I wanted to wait until after 10:30 though, because that's usually when we do get that reversal. If I find that price is just moving on up so aggressively like this, we don't tend to get that reversal before 10:30. So yes, although my setup did appear, as you can see, we have that inversion fair value gap. You get in, put your stop above that high, target at least 50%, or this level of liquidity here on the 1 minute, which is what I was targeting. It got stopped out. I would have been stopped out there. So I waited for after 10:30 just to make sure that we get some kind of confirmation that we would go lower. And as you can see, we end up pushing over that high, creating a low, a lower high, and then in this instance here, we see that we get a push down under this 1 minute fair value gap, which was in closer to discount in this range here. So that's why I felt more comfortable taking this one rather than this one here. Regardless, I wouldn't have gotten stopped out at this one, right? But I wanted to just have more confirmation in my trade just to feel confident that we were going to end up dropping. So I market ordered in right there, and I put my stop above this swing high here. Immediately price starts to come on up. I do get a little bit nervous, but as you can see, price did not stop me out. It then again, came down with displacement. And once price tapped into this swing low, I sold pretty much the majority. When I saw that we got this wick down and it started to come back up, I was like, yeah, I'm not going to stick around and play. So I left my runner. I took my runner off there and I took the majority of my position off there. So that was less than a 1-to-1. Now, why did I do that? Well, I had a green week. Okay. I've had a very nice week and I was not willing to give any of that back. So if I am able to make some sort of extra cash here, I decided to just take my gain. Now, was the trade idea bad? No, as you can see, it clearly never hit my stop loss. Only drawdown was right here. And then, yeah, your re-entry could have even been this candle right there too, right? Because then we create a bullish fair value gap there. Gets inversed shortly after. Put your stop above the high. Wait for your first take profit of this level here. Or you could have targeted that 15-minute fair value gap. Now, like I said, I never trade PM. Okay, I don't really trade preem like that, but there were other setups. If you wanted to get the gap fill of this 15-minute fair value gap, bullish FEG. This one right here invalidates it. Put your stop above that high or this swing high, and then target the fill of that gap. Boom, very easy. You can tell that we're having bearish order flow. If you look on the 15-minute time frame, you'll see like this structure right here. If we were going to end up getting some kind of move on up, we would have displaced back out of this, but we didn't. So the fact that we inverse this quickly just showed that we wanted to continue going lower. Where? To the open of New York. So very interesting day. This trade, not a bad trade. It was a 2.66 risk to reward. I didn't hold out for all of it. I literally took it all off here at this low. Like I said, I didn't want to give anything back. But yeah, hopefully you guys didn't end up red. You had a great day and a great week. And yeah, I will catch you guys all next week. Have a great weekend. Peace.